When you look at our deferred tax calculation, I've already included our total temporary difference in terms of 20.17 and 20.18. Now, with any deferred tax calculation, it is extremely important that you are able to identify the movement of your temporary difference. Now, when we look at the movement of our temporary difference, what do I mean with this? The movement of our temporary difference from 20.17 is 8.2 million, which is a deductible temporary difference, to a taxable temporary difference of 9.6 million. Therefore, the total movement from 20.17 to 20.18 is a total amount of 278,000,000. This is from a negative to a positive. Then you need to be able to identify and split that amount into the movement in terms of your profit and loss, the movement in terms of your OCI, and the unused tax loss either created or utilized. Now, when we look at this deferred tax calculation, and we need to calculate the movement in our temporary difference in terms of our profit and loss. When you look at 20.17, you will only use the 13.2 million. The assessed loss we need to include in our unused tax loss portion in our recon at the bottom, the blue section. When you look at 20.18, do you use the 1.2 million in terms of our land? Remember, when we recognize a revaluation surplus, this relates to OCI. Why? You will have to debit your land with the value being increased, credit your revaluation surplus, OCI, debit the revaluation surplus, OCI, and credit your deferred tax liability. Therefore, this 1.2 million relates to the movement of our OCI. Therefore, the movement in our temporary difference that relates to our profit and loss only for 20.18 will be the difference between the 13.2 million deductible temporary difference of 20.17 and the 8.4 million taxable temporary difference. I'm going to highlight this light blue for you to be able to follow me. Now, when we move from a negative to a positive, guys, we are moving from a negative to a positive. Therefore, this is the 132,000,000 plus the 84,000,000, and this is an amount of 216,000,000. Okay, guys, are you with me on this one? Then, important, we need to include our unused tax loss utilized. We have now used the assessed tax loss, and this is the 5 million included in 20.17. I've included the blue block to indicate to you when you add the 21.6 million plus the 1.2 million plus the 5 million, your total will be the 27.8 million, the total movement in our temporary differences. Now we need to times the movements by 28%. This is 6048,000. We know the movement in our temporary difference OCI 336,000, deferred tax liability, and 14,000,000. We are now able to transfer these amounts to part B first. We are first going to complete part B, and then I'm going to complete part A. Part B, unused tax loss utilized. Therefore, we have now used our deferred tax asset, and this is a positive 1400,000. Let's just quickly talk about our journal, guys. If we use a deferred tax asset, we will credit our deferred tax asset in our statement of financial position, and we will debit our deferred tax in our profit and loss. Therefore, if we debit our deferred tax, our expense increase in our profit and loss, and therefore we include a positive sign. Then the movement in our temporary difference. Now this is the amount from our calculation. Remember, movement in temporary difference, profit and loss amount 6048,000. Now we need to transfer. $6048,000. Now I'm going to indicate to my marker that this is in my calculation 1 for my marker to be able to follow, and I'm going to highlight this light orange. And then important, our unused tax loss utilized, either reference to your calculation 1, or please ensure that you include 5 million times 28%. Going to highlight this 1.4 million green to indicate to my marker that I have transferred this to part B. Okay, so guys, let's just quickly talk about this one, the movement in our temporary difference. Okay, so we have moved to a deferred tax liability. Therefore, again, think about your journal. You will debit your deferred tax in your profit and loss, and you will credit your deferred tax liability statement of financial position. Therefore, if you debit your deferred tax in your profit and loss, this is an increase of an expense account. Therefore, we include a positive. And the total deferred tax expense 49,000,000. We can now refer to part A, our tax rate reconciliation, and complete our tax rate recon. Remember, this is your template. This is a guideline only. Okay? Therefore, you need to add any relevant information should you make use of your template to be able to study. I have recognition of deferred tax asset on assessed loss, recognition of deferred tax in terms of our prior year. Now, remember, we still have to include our prior year unused tax loss that we may now recognize. And this will be the 700,000 as per our calculation. Remember, when you look at the top right corner, we have calculated in calculation number 2, 700,000, calculation number 1. We are now busy transferring this to our tax rate recon. This is 700,000 and recognition of our deferred tax asset in terms of the prior year. This is 1,848,000. Now guys, why negatives? When you look at your deferred tax expense, remember we have included negatives. The same principle applies as per our journal entries that we have explained. Remember, we are busy with our tax rate reconciliation. The same principle will apply when you think about your journal entries. Recognition of a deferred tax asset. Look at the left side of your screen. You will debit your deferred tax asset in your statement of financial position, and you will credit your deferred tax in your profit or loss. This is an expense account, therefore it has to decrease. Now, if you have decreased the 700,000 in your deferred tax expense calculation, remember this section is included in your income tax expense note, then you need to decrease your tax rate reconciliation with the 700,000 and the 1,848,000. Now, work through your guideline. Under or over provisions, not applicable. Change in tax rates, not applicable. We can therefore conclude on our income tax expense amount 10424,800. Now, important, and please don't forget about this, we need to include a brief description of our reconciling items.